The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 22nd, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, well, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I get to go look at the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648 is the number. Of course, you can always call us locally. 727-445-1044, whatever works for you, works for us. So let's go ahead and get started on this terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow traded up 127 points. She's trading out at 18,420. S&P up 15, 2178. NASDAQ Composite up 44, trading at 53.39. Russell 2000 up 14 points. She's trading out at 12.59. The DAX closed up 237. The FTSE closed up 76. Hey, markets around the globe, everywhere, to the upside. If we take a look at even Asia last night, we just moved down here. So you had the FTSE up 1%, the DAX up 2.25%, the Nikkei up 2%, the Hang Seng only up 0.4%, and the Shanghai up 0.5%. But green all across the board, basically nearly everywhere, with the exception of some individual stocks like Axovant Sciences down 16%, $3. Williams Clayton Energy off $3, $2.56 down about 3%. Fuller HB and Company down 5% or a couple bucks. So there are some individual stocks moving to the downside, but there are stocks that are moving to the upside, such as Amazon. All-time highs. 805 is what she's printing right now. That's up $15 and change. Google's up $14. Intuitive Surgical up $12. ELF Beauty Inc. 52%. I think that's an IPO. Should be ELP, right? If it was ELP Beauty Inc., both you and I would go to Emerson, Lake and Palmer Beauty Company, would we not? But ELF, I don't know that I will do that. Allergan, although ELO, the band ELO, they had two shows last weekend in New York. Both the Radio City Music Hall, I believe. Neither of which I could catch, unfortunately. I would have enjoyed going to see what they actually sound like. Stamps.com. You could mail me there. That's up $5 and change, nearly 6%. So what are the markets doing? Hey, here's the beautiful thing about the markets. Some elements have been eliminated that we don't have to worry about. Not until, well, quite frankly, not until 2017. Not until late 2016, right? And that thing, that individual, that group, right, the Federal Reserve, we do not have to they will not be influencing our trading decisions, at least from a negative standpoint, not for a while, not for the rest of September, not for October, for goodness sakes, not for November. If you want to focus on them, then you must have a mind that is huge, I say, because in my mind, I can only keep in the things that really have importance. And let's face it, right now, the Federal Reserve has got nada, zilch. Give me a couple other things. Zero. It should occupy zero mind time, conversation, or anything. If we can stick them off to the side, package them up, mail them away on vacation, send them to the great island of Maui out there. Not a bad place. If you haven't been, you ought to head there. So they're out of the way. No longer a factor in our decision making out here. So what things should we look at? Well, first, what did the market do yesterday? Yesterday when we were taking a look at the market, we were looking for clues. You and I found those clues. You are amazing out there in that you found those clues. Why do I have DXU6 out here? I doubt that is the current contract for the U.S. dollar index, but the beautiful thing is you found it. Right? You saw how those futures contracts for September, October, November, December, and the VIX index was really the actual signal out there, and hence that led to the market exploding to the upside. Now, the actual initiation move or exhaustion move is what we should say to the downside. That took place in the S&P 500, I believe it was September the 9th out there. In any event, we're moving topside. Well, here's what we should do for the next 3 minutes. And we're going to do it because I don't have any cards and emails. I don't have any pings inside the Tiger. Here's what we should do. It's always good to get rid of the noise, right? So the way to get rid of the noise when you take a look at a stock chart is just simply get rid of the noise. So let's go to a monthly chart out here. And if we take a look at a monthly chart, first you have to, if you're going to get rid of the noise, you have to actually put in the correct symbol, SPX. Just for those of you who wanted to know whether SPM was an index, we know the answer to that. It's definitely no. Now, this is the S&P 500. Now, what we do know is it is up against some resistance. You can see the rising price channels. That's right, multiple two price channels out here. We can see the first price channel. That's the lower green lines out here. And if price is able to break above that top line, that top rising price channel, that says that not only will prices head back to the highs, they'll go to the hills. They'll go to the hinterlands, which is going to be up in the 2,400 range, right? 2,500 range. We know there's a 2,350, 2,450 consolidation move out there. So price is up against some resistance. But there is nothing really in the way of the S&P, when we take a look at this monthly chart, moving higher out here. You're up above the 2015 high. So, this month here was nothing more than a test of those levels. That's really where the crosshairs on my chart. So everything here inside the S&P 500 on a monthly basis, you eliminate the noise. And this says, hey, you just got to clear a little bit of a hurdle out there. You do that, and it is off to the races. Those races say 2350, 2450. And, quite frankly, that can happen sooner than later out here. If we take a look at the powerful NDX 100, shoot, it is blowing past its 100% move of a move, which is really what it did last year. What do I mean by that? Well, what I mean by that is we simply got back to the old swing point in 2000. So the number to be watching, 48.1635, as long as price is above that, where the NDX 100 is headed to is its rising price channel, right? There were two out here, right? Just like we take a look at horizontal levels of support and resistance. We can look at diagonal, and we can take the same price distance move of channel number one, add it to channel number two to assist us in where price is going. When you look at this chart here for the NDX 100, why, oh why, I say, would you even be looking at shorting this? This is headed higher. This is headed mucho grande higher out here. If we take a look at the Russell 2000, let's go take a look at it. Let's go see what it is doing out. Again, we're getting rid of the noise because noise is it's noisy. And we don't like noise out here. Instead, if we take a look at the Russell 2000, she's already trading back inside her swing point high, all-time swing point high thus far. That is the month of June in 2015. The low is 1238.65. You're at 1259 right now. Where is this headed? Exactly. Not only is it headed back to 1295, it's going to go tag the top of that rising price channel. Where is that? Well, remember, there's a measured move takes us to about 1350. So 1350, 1400, somewhere along there. Over the longer haul, folks, we've gotten rid of the noise. We've gotten rid of the real noise. That's the Federal Reserve. The markets are headed higher. Steve Rhodes from TFNN. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now we're just cutting out the noise when we take a look at longer term. That doesn't mean that we're not going to have fluctuations of a market moving higher, retracements, because that's all it is. It's retracements. It's not a top out there. And, what's interesting here about yesterday, today is nothing more than follow through. Volume, schmolium. I don't care if it's light volume or not. The market's been going up on light volume since 2009. So what's new out there? The Fed's been influencing the market. Well, they've influenced it. They're going off to the side out here. Let's just take a look at other patterns that are out here. Other patterns, for example, we take a look at this one really puts it into perspective, or puts it in perspective for me. Where is it? I put it out. This one right here, right? We took a look at these index consolidations, right? So you've got the Dow back above the consolidation level. Still, you've got that nice little trend line. This is just the 2016 trend line. It's got a price tag of 21,170. And that's where it's headed over time. S&P 500, right-hand side of my screen, consolidation breakout, 2456 out here. Over time, that's where it's headed. NDX 100, it is a rocket ship. A rocket ship headed higher, going to 55.45. The Russell 2000, as we just talked about, headed all the way back to its swing point highs out here. Again, this is a weekly chart. We looked at the monthly chart earlier. We're already trading back inside that swing point. So everything it's all hunky-dory out here. Now, there are going to be some opportunities to buy into this market. Now, are they going to happen today? I don't know. They're probably not. Well, if we take a look at market breadth, and our man Z, he mentioned market breadth, and it was huge this morning. Let's go see where it is today, right now. When we take a look at market, well, first volume-wise, by the way, and that might be what he is mentioning, volume-wise, because people talk about no volume or what have you. How about if we just put volume in perspective? How about if we just take a look at advancing volume versus declining volume, right? Because that should have some relevance, should it not? It has a relevance for me. Now, what was that? Give me a moment here. Let me go find that number. Here, yesterday, just as an example, just a small snippet, the volume acceleration, advancing volume versus declining volume, 800%. 800% to 1. That's, yeah, it's huge out there. It's been huger if we take a look at words out there, or we take a look at other days. But 800%, folks, that's huge. If I take a look at just simply advancing issues versus declining issues, today it was like 10-1. I don't know where we're at right now. It's probably a little slightly less than 10-1. Let's go see advancing issues 2534, declining issues 469. So that is what, 5? That's 6-1, nearly 6-1, 5 to 6-1 advancing issues. That's strong market breadth volume. Now, what that does, if we go take a look at the advanced decline oscillator reading out here, and if you're asking when's that next time that we're probably going to see that short, and people are going to misread it, by the way, because it is likely to occur at the following. In the following, here's the NYSE, and there is a nice little draft gap to the downside, wide-ranging bar, the whole 9 yards or years out there, September 9th. I don't remember. That was the date, September 9th. I remember it well, because I turned another year older out there. Not that I want to remember it that well, but I do. It was a Friday. Out on Nantucket Golf Club, oh, the wind was blowing, was smoking the ball right down the center, sometimes a little left center out there, and the market had careened to the downside. 400 points in the Dow, and of course I was getting emails from that individual that doesn't really want to really want to give me too much information about themselves out there, telling me that the S&P was going back to 666. Hey, maybe it will, but it's not going to do it anytime soon out here. Now, big, huge downdraft out there. He also had that crazy guy in North Korea. What's his name? No, it's not Dennis Rodman. It's the other crazy guy in North Korea that was setting off nuclear explosive devices out there. In any event, that's where the New York Stock Exchange is headed to. It's going to head to the bottom of that gap out there, 10,857.22. And at the same time that it does that, the oscillator reading at the bottom, which right now measures out at 124.15, is going to hit 150. You just don't take my word for it. I'm not even going to take my word for it. I just know what I'm going to be looking for. But if that happens simultaneously, at the close, you're going to see the market pull back. And right then and there, somebody's going to say, that's it. It's over. You've just hit the downdraft. Things are going to be careening to the downside. And I'm going to say, you're not a chance. You're going to be your opportunity to buy into the market. Doesn't mean that you can't play to the short side, but have a short wick there, folks. Because you're going to, and if we get above 150, God forbid we get above 150, and we very well may get above 150. And if you're a bear and you see this advanced decline oscillator reading close above 150, what you should do is go into hibernation. Wintertime is coming. Somebody in the den said it today was summer solstice. Summer is over. And that means we got to put away our white tennies, our white tennis shoes, our white shorts, our white pants, and, all that kind of. Well, you don't have to if you live in Florida. But, if you live anyplace else, you sort of have to do that. And what do I mean about this plus 150? You get above plus 150. It's just another indication of an initiation of price moving to higher prices. That is the message of the markets. It is the message of the markets on every single index in the world. Well, I can't say every single index in the world, but I can say in the DAX, the FTSE, the Hang Seng, the Shanghai, the Nikkei, the Dow, the S&P, the Russell 2000, the Wilshire 5000, the New York Stock Exchange, the NDX, the NASDAQ Composite, the semiconductor. Oh my goodness, the semiconductor index. Can you believe this? Let's take a look at this. Usually, you see the semiconductors or the financials kind of leading things to the downside out here. If we put up the again, this is the noiseless chart out here. You take a look at this indice. Then you look at this. Where is this headed to? Really, it's nearly at its kind of highs that it has been at since 2000. It's not all the way back to its highs in 2000, but it's not doing too shabby out here. Yeah, somebody might do a retracement out here, a retracement from the high out here in where it was March of 2000 down to the lows in 2009 and say, it's only done let's go see what it's actually only done. It's only, that's an expansion. I got to actually change the tool out here. But let's go take a look at it. If we take a look at the retracement level, somebody's going to say, it's only done a 0.618 retracement. Actually, it hasn't even done a 0.618 retracement. So what? This thing is above highs from this. There's no resistance inside of the semiconductor index. There's no resistance, not until it gets to the top of that secondary rising price channel. It doesn't mean that this thing can't pull back. This market here is likely to today it should have pulled back. It should have. It should have pulled back. It didn't. What's that mean? We're going into Friday. You don't think that the shorts have got the sphincter muscle getting a little puckered up and tight right now? And if they don't, they should. And come tomorrow afternoon, those who were second guessing and saying, well, I don't know if I want to carry the short position in the long weekend, they're going to close it out. Things are going to finish up at their session highs. We're going to get to that potentially overbought area. Of course, they're going to go ahead and unload at the time when probably there's going to be some type of retracement that could have unloaded at a little bit better price out there. And I don't know for sure that it's going to happen tomorrow, but it is likely to. It's Thursday. We're not going to see a huge sell-off coming into the day today. We don't see that. Well, maybe David White, maybe Tom O'Brien will get us started. Maybe on their shows. On Stevie's show, not a chance. Prices are moving higher. Well, you can say that the NQ could be, I say, in a seventh wave to the upside. So, yeah, we got to be careful about that. But I don't even think that is enough to go ahead and stop the advance in price. I don't even think it is wave number 7 to the upside out here. The markets, you're kind of getting Stevie's picture. It's really not my picture. It's the picture of the markets. They're headed higher. The VIX index, it's headed down to, I'll give you that number when we get back from this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, I was mentioning the VIX index yesterday, and yesterday you and I, we took a look at that. You pegged it so well out there. You said, hey, let's look at September, October, November, December. Let's take a look at those future contracts and see where they're trading in relationship to the 50-day exponential moving average. And amazingly so, you were right on there because they were trading below the 50-day exponential moving average. And we know that when the cash VIX index trades below that level, there's really only two things that are going to take place. You're talking about the market moving higher because it tells you plenty of liquidity, or sideways out here. And so even though the cash VIX index was not trading below that level prior to the Fed minutes out here, the futures market was communicating to you and I, was blowing a big fat horn out there. Now, what the VIX index is doing, it's headed back. So this could be just a perfect timing aspect. This is how I see it playing out. I already gave you where the market's going to head to in the New York Stock Exchange. It's probably going to take the advanced decline oscillator into that plus 150-ish category out there. That is overbought. Once you get there, the market has no option. Well, it does have an option. It can continue higher, and if it does, then my goodness, you are going to get steamrolled like there is no other steamroller out there, baby. Even James Taylor would go ahead and tell you that. However, it is often a place, and it's more than just often, a place where you would see an overbought pullback, retracement. Now, ideally, that's going to take place at the same time the VIX index is going to get down below, going to get to 1141 or lower. Right, it's the bottom of that blue line that is on my chart. That's the top portion of the panel of my screen out there. So that's where the VIX index is headed to. Until it gets down there and below there, you're not going to see any kind of real short-term top out here. And even when we do, then what you're looking for is you're looking for that VIX index to get up to about the 50-day exponential moving average. That would be a nice little retracement and pullback, and that's where you go ahead and fire away. You get ready for the next move to the upside out here. That's what the markets are communicating to you and I. And trust me, when they change, when that message changes, I'll be out here blowing that same horn. Uh-oh, timeout, ain't going to happen, foul, big foul, penalty shot, the whole 9 yards. But that is not where we are at just yet. So your mind has got to be thinking, there we go, back to that technical term, gotta, but it's got to be thinking buying the next retracement out here. And we'll try to time that, but we do know some of the elements that we're looking for. Inside the den, the question was, because I had mentioned the volume, up volume versus down volume out here, right? There are different ways for us to utilize volume as an indicator. Another way to utilize volume as an indicator, we talked about the huge up volume versus down volume yesterday. I also do it the flip. Right, I do the Flip Wilson version of that. What was her name? What was Flip Wilson? What was the name of that character that he did? Come on, somebody knows right off the top of their head. Maxine? No, it wasn't Maxine. It was God. But when Flip Wilson, and I'll do the flip side of this, which is taking Geraldine. Geraldine, thank you, Duffy, thank you, Jay out there, Geraldine. So I wish I could do the Flip Wilson, I wish I could. But what we can do is we can do the Flip Wilson of the New York Stock Exchange, which is taking a look at down volume. And when down volume exceeds the up volume by 10 to 1 or more, that is typically, because it doesn't work 100% of the time. If I found an indicator that worked 100% of the time, I wouldn't even tell you what it is. That's not actually true out there. But I don't know of an indicator that works 100% of the time. So, but here's what I do know, that when you get to greater than 10 to 1, that what you're starting to look at, especially where are we at in the trend? Where are we at in the trend? Because if we're just coming back to a trend line, some type of level of support, it's an exhaustion move. And we had two of them. You had one on September 9th. September 9th, just to give you an idea, the down volume compared to up volume was 27 to 1. Yeah, it was huge. We don't see 27 to 1 too often. In fact, here, I'll just, because somebody's going to say, what do you mean not too often? Well, when was the last time? Well, and then to follow that up a few days later on September 13th, we had, what was it? It was 24 to 1. So we went from 27 to 1, 2 days later, 24 to 1. Exhaustion, exhaustion, exhaustion. That was the message of the markets. And yes, the devil did make the market do this. If you want to call, Janet Yellen the devil. Although I don't even think, folks, really, those of you that are counting for a increase in interest rates in December, really, Cole, you really think that Janet Yellen is going to go ahead and deliver? Cole, come on. When is it? When is the Fed's meeting? Is it like the week before Christmas? All through the House? Not a creature was stirring, not even the Federal Reserve going to increase interest rates out there. It ain't going to happen. She's not going to deliver coal. There's going to be some reason, some excuse. It might be, hey, Merry Christmas out there. That could just be, it could be something as simple as that. So when did we last have a significant negative exhaustion move like that? Well, actually, the last time we had a 10-to-1 reading was back on June 24th. June 20. Does that sound familiar to you, that June 24th time frame? Yes, Brexit bottom time frame, right? Of course, the market made a nice Brexit bottom back there. Again, does it work all the time? No, but again, these are statistics. This is data. This is a Stevie spreadsheet out here that I keep track of every day, almost every day. Sometimes I have to update it after a couple of days out there. The time before that we exceeded, by the way, 10-to-1 out here was December 11, 2015. Somebody go back. Well, here, let's take a look. What was going on in December of 2015? December 11th. What was that, December 11th? Oh, yeah. The market made a bottom the next day, 2015. In fact, made a little hammer candle right there on December 14th. Is this worth paying attention to? Yeah, of course it is. These are wonderful statistics to get our heads out of the clouds. No, that's not what I was going to say out there, right? Because sometimes volume is a wonderful tool, is it not? Yeah, because you get when you take a look at up versus down, and you got up that is just simply careening the down. It's an initiation move. It can be a blow off top. Was yesterday a blow off top? Come on. Not even on the strangest, wildest definition out there. We're moving higher today. We're not moving lower. We didn't give it up right from the get-go out there. I'm just looking back here, flipping through. Okay, the last time we had a 23-to-1 negative reading was September 1st, 2015. Just curious. I don't know what was going on September 1st, 2015, but we're going to find out, right? That's 2016. I really should go to September 2015. Where were we? September 2015. That was right here, just as the market was making its was consolidating down towards its lows out here. How about that, folks? So, we've just had two of those back-to-back readings. The markets are headed higher. Merry Christmas to all, and to all a good night. Now we still have time left in the show out here, but the markets are going to head higher. The Fed is out of it. What, we're just going to sell? They're tax selling? Yeah, sure. And of course, it all depends on maybe who gets in, right? Maybe it depends on who gets in, But at this stage here, with the markets moving higher, we already know who's getting in, don't we? It's not going to be the guy. Right, the guy, if the markets move higher out here, I can just tell you statistically, you go from a Democratic president to another Democratic president. The market is moving higher during this unfavorable seasonal cycle. It's just the pattern that is out there. And so that is likely to be the pattern at this place. You don't even have to vote. You should vote, though. Don't. I mean, I'm just saying that it's already like preordained. Even somebody thinks it's preordained. Now, if the market, like I say, the market does something different out here, gives us different information, I'm going to be out here being just as loud to the downside that, guess what? Man, something went awry. Totally went awry. But right now, this is rye bread. And there's nothing like a nice piece of rye bread toast with some butter on it. And put some nice smoked salt. Put some, what's it called, Maldine salt or something like that out there. Mwah. Steve Rhodes with TFNN. We get back. Let's go take a look at gold and silver and light sweet crude.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. If we take a look at, there's a question that came in through the Tiger's Den asking if we could take a look at in essence, the NDX 100 and some short-term or intermediate-term targets. And in order to do that, what I'm going to do is, instead of relying on the actual cash indice out here, the better signals come from the actual futures contracts. Now, if you're watching us on TigerTV, which I hope that you are, you're going to see the upper left-hand panel is the ES Mini, S&P in essence, and NASDAQ, NDX 100. Off to the right, lower left's going to be the Dow, lower right's going to be the Russell 2000. Now, specifically with regard to the NDX 100, since we're above highs out here, and I venture not to go ahead and type in there, I'll do it, the A to B equals CD to the upside. In fact, there was a question in the den that said, hey, how do I draw my A to B equals CD tools? I have written software specifically for e-signal application as well as a Ninja Trader application. At one time, I was selling this through TFNN, the A to B equals CD indicator for the e-signal platform. If you've got an interest, send me an email. We'll see if we can get you set up with that. And the Ninja Trader have got something similar as well. Now, the one-to-one, A to B equals CD, it actually takes you up to 52.90. That's like a super long term. In fact, if that comes to fruition, by the way, it's not 52.90. It's 54.71 where price will head to. I don't want to make that call right now. I'm not really interested in that type of a call. That's not really what was, I believe, requested of me. But that is the A to B equals CD pattern that is out there inside the daily chart for the NQ. There is no other A to B equals CD pattern out here. If we take a look at those short term, since we are above all kinds of swing points, we're above market profiles out here. Those are wonderful levels of horizontal support and or resistance. We're just right now flying by the seat of our pants. Now, the seat of our pants, thank goodness, is going back to Leonardo DiCaprio. And he, because he was related to Fibonacci out there, he said, take a look at your last set of swing points, which in this case here was that little doji candle from September 7th down to the low out here on September 12th, and said, make your 1.272 expansion of those levels and your 1.618. Those become the target. So you want the target, the short-term target we've hit it. We're sitting there right now. 48.91 is the number. We're trading out at 48.89. Does price have to stop here? No, not at all. It does not have to. If it does not stop here, then 49.63. Can it stop here? And the answer is it can. Why can it? Well, again, if we go back to just now the 30-minute chart out here, in a 30-minute chart, coming off of this low out here that was at about at midnight, this was on September 21st, coming from that low to where we're at right now today, we are in a seventh wave move to the upside. And I don't care if it's a 10-minute chart, a 30-minute chart, a daily chart, a 300-minute chart. When you get to that seventh wave, you got to pay attention. There we go with that got to. And you got to pay attention. Well, first we look for a candle signal out here. We don't have any kind of bearish candle signal. This, by the way, that seventh leg can continue on by going to higher price out here. We probably will. But on this next candle that we're in out here, Mr. Z, this candle is very likely to go ahead and complete, especially if we get above the high here of the last candle, go ahead and complete a TD combo count. Right? You know, Tom DeMarco's got the TD setup. He's got the TD sequential. He's got the TD combo. He's got plenty of other TD stuff out there, but it's one that we would pay attention to. So knowing that the daily is up against the 1.272 Fibonacci expansion, knowing that we're in wave 7, knowing that we might get a signal where a market just kind of also gets exhaustive out here would be the time for the market to pull back. Now, how will we know if that's really going to be the case? So it's very simple. We would see a close below first the oscillator unchanged line. That currently is priced out at 48.87 and a bit of change out there. So if we see that with those signals coming together, then that says, okay, you start to move down to the bottom of the TAS market profile. That would be your support level. So that'd be 48.69. There's going to be people writing about that it failed on this and that and the other thing. No. Folks, this is like anything else that you do in life where you put in the energy, and when you're done and you've given that presentation, or you've or whatever it's a sport, you gave it your all in that competition. Gosh darn, you get just a little bit tired and you need just a little bit of downtime. It doesn't mean you've given up on the sport, that you're done, it's toast, it's over. No, that's not what it means out here. Then we just start taking a look at patterns, for the market to go ahead and pull back. So short-term, kind of intermediate type time frame. Now, if it doesn't stop here, then what do you wait for? Well, I just simply go up to the next time frame chart, and that would be a 2-hour chart. And the 2-hour chart says, well, you know what? Hours from now, not like this hour, not like next hour, probably not by 4 o'clock. So it's going to be during the Asian hours out here. You could actually get to another on a 2-hour chart. You could actually get to another TD setup out there. So you've got to look for where is it that the failure. Now, Tom DeMarco had a different failure system. I tested it. I didn't like the results I got from that failure system. Instead, I found something that worked better for me, and that's really why I share that information with you. And in this case here on the NQ, man, a pullback to 48.67, which would really be nothing. That's really like peanuts, okay? You got to break below that. You got to close below that in order for there to be any kind of decent, meaningful retracement in the market. I don't think any of this really happens coming into a Friday, coming into a sphincter tighten muscle special out there, with the VIX moving down to levels we took a look at it, with the New York Stock Exchange moving up to the top of that gap out there. It just looks, that is just like wide open out here. Now, what's going to tell us whether that's truly going to happen or not? It's probably the Russell 2000, because the Russell 2000 futures contract, daily right now, got a 10-minute delay on this thing, by the way. It's right up against resistance of its daily, or weekly, I should say, weekly market profile, 1258.50. So, we've got two strong indices kind of up against resistance levels out here. So we'll get some information. But again, and I say that with my voice kind of cutting in and out there, because I'm still fighting this nasty New York cold bug that I had brought back, and it is a nasty bug, but and it's unusual. I typically do not get sick, but in this case here, even I am no match for a New York bug. But we'll get rid of it. So I hope that answers your question. And then where does price pull back to with regard to the NDX 100? What is the magic number that you're looking for? Where it's called the make it or break it level inside the NDX 100? It's pretty simple. It's 48, 39, 81. Not to be exact, but to be exact, 48, 48.39. Oh, it's 83 right now. It's going to change, as you can see, from moment to moment. But it's going to be in that 48.39 type area out there. And as long as price stays above that inside the index 100, the message is very clear. Price continues to motor on, even though we're not in the Motor City. Okay, let's go take a look at something else out here, although we don't have much time left before we go to a commercial break. But we do have gold that's trading up at $12 and change out here. And what gold is doing, you and I took a look at this yesterday, just heading to the top of its descending price channel. It's basically there. So it's tired. This could be the extent of the move in gold. Then it moves back into the cone of silence. We may just have kind of this, really tight-ish type range out here inside of gold. Whether it breaks the upside or the downside, when it does that, then we'll come back and give you a feel for where it's headed. But right now, the move in gold could be done with. It certainly is headed towards resistance if it's not already been there. Steve Rhodes with TFNN. We'll be right back, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Of course, we were reminiscing in the den earlier. One, we were taking a look at, I just turned on the sound on my system, and Basil was talking about his, he's got amazing patterns out there. What I love about so many of his patterns is that, look, we're all visual. we learn from metaphors. Metaphors either propel us or they hold us back. So, if you're somebody that feels like you're carrying a lot of baggage, right? Have you ever heard somebody say, they're mad, they're depressed, they're sad, they're this or that, right? It could be us from time to time. It's been me. You got to break yourself out of these bad metaphors. And if you do feel like you are, I used to feel like I had a noose around my neck. And then what I did was I said, a noose, I went and bought myself a nice necklace or a muse, so that anytime I felt like that, I could touch it and say, no, it's not a noose around my neck. It was a muse around my neck. And then I was able, and that muse had a positive metaphor for it. So if you know somebody that feels like they have a lot of baggage, all you have to do is put your arm around them and say, why don't you put that baggage down? Now, how do you feel? It's amazing stuff. Well, in the case of Basil, he's not getting off topic here, but he was talking about his Groucho Marx eyebrows, which is kind of a double topping type pattern, but which is very cool. And then that reminded me about the Groucho Marx, you bet your life out there. And then we're in the den here. We're talking about Get Smart, right? Maxwell Smart, I guess, right? And then as Terry said, it was a really big shoe, and it was. Speaking of really big shoes, Terry, can you believe this? I don't know if this is true. I heard this. You tell me if it's true or not. We got self-driving cars. That's just kind of like a no-brainer. And now we're going to have self-tying shoes. Is that really true? Is that true? That our kids are not even going to learn how to tie their shoes now? We've got self-tying shoes that are on their way out of here. Man, what is this? What is this world going to come to? Hey, back to gold, by the way, Goldilocks out here. If we take a look at the 30-minute chart, a possible indication that the top is in, we might be trading sideways, is the 30-minute chart out here where prices have been moving higher. It has been doing with less relative energy. We have gotten a bearish reversal signal, the dark cloud cover. We're now starting to see, and on the 30-minute chart, we're starting to see price trade below that oscillator on change line. That's at 1344. It's right up against a TAS profile high. So any close below 1343 says expect 1339. For those of you looking to take your next trade to the upside, look at that 1339, 1340 area as one possibility to go ahead and take another long trade out there. And the 2-hour, by the way, all that we have out here, it looks like, is the potential for wave number 6. Maybe there is a 7th wave to come. Nothing else out here on the 2-hour chart says that gold is ready to turn back, and it might want to go ahead and hit the top of that descending price channel. That picture changes if you were to see a close below 1340.60. Testing 1340.60, moving higher, that was a buy point, but getting below it says, okay, 1325 is where Goldilocks would then move to. In the case of the light sweet crude itself may have also begun to run out of gas. How's that for a metaphor out here? Because right now, it looks like what it's done is it has tested the swing point high from the trading day of September the 8th. So 46.41. Now, if it closes inside 46.41, there's nothing here that says that it won't, I don't think. Let me put up the 30-minute chart out here for the November contract. But if it does close above 46.41, then you can go test the highs. Yeah, when I put the 30-minute chart out here, I don't have anything to suggest that it won't get above 46.41. It's just really, well, let me just see here. Let me just make sure. Let me go do a little bit of wave counting here while we've got just a few seconds. Nah, yeah. So if anything, it's recycled. We don't have anything to suggest that. But and your confirmation won't come from the 30-minute chart. It'll come from a close above 46.41. So, folks, thanks so much for being here. Thanks for staying, because you're in store for a great another 3 hours. Because our one and only Polar Bear David White's up next in the Tom O'Brien Show. Hey, it's Thursday. 4 hours. Then you got Andy Heck to take it on home. Have a great Thursday, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.